San Francisco real estate right now is absolutely busted. It's probably one of the worst times to be buying San Francisco real estate. If you look around, many of the super wealthy individuals are just simply leaving the city. There's just too much crime, too much homelessness, and San Francisco, used to being one of the biggest epicenters for tech, is now one of the biggest epicenters for just homelessness and crime. And the ultra rich are buying fewer San Francisco mansions than ever before. I think they're pretty much done with the San Francisco market. And the people who could afford mansions over $5 million no longer exist. In fact, there are so many better places in the United States where you can spend your millions of dollars on real estate than San Francisco. If you're spending $3 to $5 million on a San Francisco property, I want to ask you what's wrong with you. Because if you look at some of the numbers and statistics, they don't lie. San Francisco's super rich have pumped the brakes on buying luxury estates, many of which are dropping sharply in price to entice the buyers. They can't sell them anymore at the original price. Many of the high-end condos, high-end apartments, the townhouses and homes are all being sold, sometimes even for 40% off. And we're not even talking about the commercial sector, which is already pretty bad. If you look at the commercial sector, the vacancies are 36, 37%. Oakland is even worse. And it's rising every single day. Commercial real estate, if you go on LoopNet, has like a 50% discount. I'm not even joking with you when some of these properties are selling for 60, even 70% off. Wells Fargo took a massive L and even decided to sell their office building in one of the best office districts for a measly 60, 70% off. That is better than some Black Friday deals out there, in fact. So yes, the ultra rich are just stopping right here. They don't want to buy any more of these houses, and especially homes in San Francisco that are priced more than $10 million, they no longer exist. In fact, there's a few homes on Zillow, if you go check, that are over $10 million, but they've been on market for years. They've been trying to find a buyer for years, but anyone who could afford homes over $10 million usually are entrepreneurs, and they see the situation in San Francisco, they won't buy it. Nobody's spending this money in San Francisco to work. Many of the most wealthy individuals are leaving the city. And if you have money, why would you buy a vacation crib in San Francisco? You could buy this somewhere else. So if you look at some of these properties here, like 3410 Jackson Street, was on the market for $23.5 million, eventually selling for a good price of $18.5 million. Another one was listed for $16.5, sold at $13 million. Another one has one of the biggest price drops I've ever seen, $32 million price tag, sold a few months later for $20 million. Luxury home sales are having one of the biggest downward pressures, and it's enormous to see this kind of stuff. Not to mention the amount of home sales for ultra luxury properties are at an all-time low. Go to X right now and look at some of these home sales. So we have a very nice house in a pretty suburban neighborhood in San Francisco, was listed a few months ago for 1.5, sold it for $1.27 million. The property looks like this, and the location is actually fantastic. You're right next to like a park. You're right next to some of the beaches, and you're actually really far away from the downtown, which is where all the hectic, crazy San Francisco action is. You're near the hospital. You're near a golf course, a decent high school. I don't have any complaints. Like, the location and the lot size of this unit is fantastic. And it's well worth its price of $1.5 million. But guess what? The seller, despite having all the high-end stuff, sold it for $1.27. Right? It's not exactly great, but hey, man, compared to some of the downtown properties, it's really not that bad. And I think it's really only going to get worse as time goes on. If you check this out, $880,000, 2-bed, 2-bath, 820 square feet, listed originally for $1.3 million last year in October. Took them like a full 14 months to sell this price, and they sold it for $880,000. That's crazy. That's like over a $400,000 discount for a $1.3 million condo. They finally sold it, and not gonna lie, this is not even in a great neighborhood. If you look at 311 Groove Street, it's kind of in an area where there's like a lot of homelessness, because it used to be concentrated in the Tenderloin district, but it's also really going to the Civic District, Civic Center as well. The places around the Twitter building isn't really that great either. Places around the NEMA building isn't great either. And San Francisco just really becoming a pretty big dump. And this unit just really affects the area as well and other buildings. If a brand new construction boutique condo sells for dirt cheap prices like these, what about the other units around, right? It's getting pretty freaky. If you look at this, it's not just the boutique units, it's not just the big mansions, but even the average Joe large scale construction projects like these. 1554 Market Street, San Francisco condo building has sat empty for years, may finally become rentals. In fact, the investor who owns this building, they couldn't sell a single unit. They have over 100 units in here. They can't sell a single unit. And what's crazy is this project actually launched sales before things got super bad in San Francisco. But most of the big investors kind of sniffed out the future of San Francisco. They didn't buy anything. In fact, this building has already applied for rentals. They can't survive. Okay, they haven't sold a single unit. They're paying property tax every year. They're paying HOA. They're paying fees. They keep paying people to upkeep this building, and they're not making a single penny. It's literally just a big box of iron, steel, and glass, and they can't make any money off it. They can't sell it. Okay, and if they try to sell it for an insane discount, they're going to get buyers, but they're going to lose out so much money. So they might as well just rent it out. But here's the thing: it's not even that great. Consider if you go right across the street to the Neiman building. The Neiman building is also having problems trying to rent their units out. And the Neiman building has 700 units. And they're about to default on their $250 million loan because they can't rent anything out. So I don't really think this building, this condo building, converting themselves to rentals will solve anything. In fact, it may even make things worse. Having even more rentals on the market around that vicinity will probably drop rents for every single landlord in that area. And check out the pandemic levels of mobile device activity. Compared to before, it's pretty bad. Now, places like Salt Lake City and Columbus, Ohio, all experience increased amount of devices, which is a good thing. It means people are actually walking around in downtown. And we all know how bad St. Louis and Portland was, right? A lot of people have left. But I'm surprised that San Francisco is actually on the bottom of the pack. I mean, St. Louis is 38% of what it was before, which is really terrible. Minneapolis, Indianapolis, Portland are all at 40%. They can't even get back to their original amount. And San Francisco hits an all-time low at 32%, with the majority of the tech workers all leaving downtown San Francisco. They don't want to stay in this place. This place is no longer appealing for them. In fact, a lot of corporations are already leaving San Francisco. They feel like this no longer is a place for work and leisure. This place is just filled with a lot of crime, a lot of homelessness, and the city just refuses to change anything. And this is why you're seeing so many businesses and even restaurants just simply closing down, because these restaurants and businesses just cannot survive. And San Francisco has truly become a ghost town. If you guys thought the pandemic was bad for the city, well, the post-pandemic is even worse. Whereas some cities experience a massive post-pandemic boom, San Francisco experienced something that's completely opposite. And it really reflects on the massive decrease in real estate prices. Real estate prices will easily tell you if a city is good or bad. If it's a fantastic city with virtually no crime, and a lot of tech, a lot of young tech workers, the prices will skyrocket like crazy. It will keep growing every single day. But when you have $400,000 discounts, it doesn't look great at all. And before guys leave, definitely check out the private Discord server, guys. Patreon link below for some amazing trades. We're offering a 7-day free trial. And guess what? Our Discord servers are actually making money. One of our traders this week made a bunch of money on the Tesla calls. We lost money on the Microsoft calls, but look at all the other ones we made, right? Intel, Nvidia, Goldman, Roblox, Tesla, SoFi. And we're making more every single day. Trade with us, guys. Make some money with us. There's even a free trial, and we even have tutorial videos to help you, 24/7 admin supports, and we're literally trading really well. See you guys later.